Welcome to Digital Asset News to get top stories in cryptocurrency and digital assets. And I'm bringing on to bite-sized pieces today. Wow, there is a lot going on, so let's jump in. So first up, here's why Bitcoin flash crashed and what to expect next. This is a good article by Akash Guramath, but it doesn't tell the whole story also. Mike Novogratz talks about this being one of the most important years for crypto, and I got to believe him. I got to think that he's correct. However, I don't think it's just this year. I think next year coming up in the first 2 quarters is going to be massive. And I like to hear from guys who have been there also. Bitcoiners are transitioning from maximalism to centrism. And if you look at some of the different social media outlets, you will not see it. But I believe that this is going to become the mainstay. That'll also lead us to Q of the day. We'll go over 2 different questions. That'll be at the very last part. But before we do that, let's take a look at what the heck is going on with the market. So today, it is September 2nd. It's about 2 p.m. Texas time. Hoping to get this video out pretty quickly, but what the heck happened? So Bitcoin down 5%, which, you know, in this market, not too big, but we haven't seen that too, well, we haven't seen it lately because of the bullish sentiment towards cryptocurrency, most importantly Bitcoin, and most importantly DeFi. But took a big tumble. Now it's down to 11,372, down 5% in 24 hours. And on top of that, you also have bigger hits. Almost 9% for Ethereum, 6% for XRP. Tether is Tether. Nobody cares. Chainlink almost down 10%. Polkadot down 6%. Bitcoin Cash. I mean, everything across the board is down. Bitcoin SV finally drops out of the top 10. EOS down 10, 2.2, and so on and so forth. So not a great day for the cryptocurrency market, but a pullback, like we have always said, is healthy. The question is why? Because this is not just a pullback, but it feels like more than that. And how far will we go? Well, it's anybody's guess, but we can kind of take a look at what's going on. However, I will tell you this, that there was an article that was written that talks about how Bitcoin doesn't control the market anymore, and it doesn't really matter. And I'm here to tell you, I don't think that's true because as we see Bitcoin tumbles, everything else tumbles. However, maybe the real question is, was it Bitcoin that tumbled, or was it DeFi that tumbled first? That's the real question. Because DeFi, in my opinion, there's opportunities for massive gains. Do not get me wrong. I think it is phenomenal. I think DeFi is the future for sure. I just don't think that going up, 200, 500, 1000x in a week is sustainable. I just don't think it is. I mean, call me crazy, but that's just how I am. Now, a lot of people out there will be like, you know what? You're crazy. This is something new. It's never been like this, and this is how it is. Well, let me tell you something. As long as I've been around, the more things change, the more they stay the same. And I've lived through a lot of different things in my 40-some plus years on this planet, and I can just tell you right now that nothing really surprises me anymore. And when I saw cryptocurrency come out in 2017, I thought, this was it. This is going to be fantastic. It's going to the moon. How can people not see how fantastic it is? That was in 2017, and guess what happened in 2018? Huge bomb, and it just went down like crazy. I'm like, what the heck's going on? The more things change, the more they stay the same. So where does DeFi going to go? I don't know. Again, I think it's going to be awesome. I just don't know if it can just sustain going up 100, 200, 500% every single time. There has to be a little bit of a drawback. So UMA, we see that there. What else we got? Yearn.finance, which was up 117% for the week in 7 days. That is phenomenal. However, I think it was at 38,000, somewhere around there. Now it's at 29,000. So if you got in, you FOMO'd in, don't kick yourself. It happens. Even happens to me. Not as much as it used to, but just reset yourself. No big deal. And then what else we got? 6.64 OMG network. I don't know why that's down. That was fantastic. Thankfully, it took some of the fees off of Ethereum. Thank you, OMG. I appreciate that. And then also, where is that? I'm looking for Sushi. Sushi. Here we go. Down 34%, but I got to tell you, massive run. Hasn't even been up a week, and we see it's almost doing, what is this, 24-hour volume? 597 million, and it hasn't even been around a week. So if you got into Sushi, congratulations. It's just down a little bit today, but hey, I think not too long ago it was like $3. So what are you going to do? All right, let's jump into today's top stories. So this is by Akash Guramath. I'm sure I screwed that up, but first of all, who's this guy, and what should we listen to him as far as what he writes? Well, Akash here full-time crypto writer, analyst at AMB Crypto. He's an engineering grad with an avid interest in finance and economics. Attracted to the chaos of trading. Who isn't? Akash has invested in Bitcoin, ETH, and XRP for educational purposes. Sure. Wink, wink, nod, nod. Look, I will definitely read an article from somebody who is in our space. So I'll give this guy a pass. What do we got? So Bitcoin witnessed a flash crash, or a pullback, we'll say, because I know that's going to be in the comment section. It's not a crash, it's a pullback. Okay, great. 11.7, 11.1. Great. But it happened in less than an hour, and it's taken down a lot of altcoins with it. Everything's down about 2%, 2.2 to 6% in the last hour. And as we just took a look, it is even more so than that, with the exception of Polkadot. Actually, I didn't really go over that. I think I did, but let's just make sure. Polkadot, that's still down 6%. What are you going to do? All right, so going on. This has caused a cascade of liquidations that range as much as 45 million, with about 9 million worth of sell liquidations. For all my traders, my heart goes out to you. What doesn't kill you make you stronger, and hopefully you can bounce back. Perhaps the crash was just a FUD from the circulating news about the Korean exchange that was reportedly being seized by the police. According to South Korea's newspaper, the Seoul Shinmun, Bithumb, how you want to say it, offices have been raided by the authorities. In addition, the exchange is reportedly being accused of pre-selling 30 billion worth of BXA tokens to investors, whatever that is. To make matters worse, after the tokens were sold, the acquisition deal with Singapore's BK Group didn't go through, and the tokens were never listed, leading to investor losses. So that's part of the story, and it could be true, it could not be. It's FUD. It might not be. I have no idea. And over the next couple of days, we're gonna hear about the truth. However, I will say this: Akash gives us some good information. Here's what I think. I think sometimes that we are in such a small pool of different whales and different investors and institutions that just a little bit here can look like here's the thing. If I was a whale and I had a ton of money, right? Because what are we at? We're under 400 billion, right? And for some whales, that's not a lot of money. They can just go in their liquidity and just do a bunch of different trades, and it could screw up the market. Or what they could do is go, you know what? I'm going to hide all the different trades that I'm going to do, and I'm going to pinpoint it to some innocuous article. Maybe this Bithumb actually is going down, and I'm going to hide it right there. I'm going to do some trades, let it crash, and I'm going to buy up everything cheaply, which is probably what's happening in the background. And even if they weren't responsible for it, it's the same thing that's going to happen. I always feel like that these whales out there are super manipulating the market, and it's just a game of these big entities. And there's only one way for me to beat these guys, and it's not trading, it's not looking at technical analysis, even though if you want to do that, that's cool, I don't care. But for me, it's just buying and holding and waiting till I have my exit points. And for Bitcoin, it's around 100,000, maybe even 200,000. For Ethereum, that to me is a $10,000 coin. For Chainlink, it's a $1,000 coin. You just keep going down the line. I will not sell. My hands are as strong as you can possibly get them, because I lived the 2018 crash. I just don't care, and I'm too damn stubborn to let go, and that's how I got it. So let me know what you think in the comments section. Let's move on. Next up, I like this. I like listening to Mike Novogratz. Some of you don't like him, some of you do. But I got to tell you one thing. This guy's been around the block. And the things that he's talking about, I'd like to hear from people who have been there. I do not want to hear about virgins talking about sex. That's the easy way I can say it. So when this guy's talking about, look, this is what's happening, CeFi, DeFi, sushi, Tesla, and the bubble, I find it enthralling. So let's just take a listen.
How it's pushing a lot of people into different assets. But what has it meant, do you think, in terms of the viewpoints on cryptocurrencies?
So listen, crypto, like any of the other speculative assets, has benefited immensely from a perception of zero interest rates forever and central banks just jamming liquidity in like they're trying to feed a foie gras duck. You're jamming the food into the duck, and so we've seen a nice move in the Bitcoin price. We've seen a stellar move in the Ethereum price. That's based around this burgeoning new space in crypto called decentralized finance. And what you're seeing in DeFi, which is really interesting, is really reminiscent of what you're seeing in Tesla. just a speculative frenzy. There are new projects that are doing really cool things, but they're getting such a surge of liquidity so fast. It's changing at a speed I've never seen in markets. There was a new project called Sushi that was only launched 5 days ago, and it's over $1.5 billion market cap in 5 days. And so that worries me some. It's early in DeFi to see speculative frenzy like that. I mean, I think about Tesla today, right? Tesla's a stock that's up 600% on the year. That's trading at over 1,000 times earnings. Was up 13% yesterday after being up 70% because of a split. And they announced they're going to sell $5 billion worth of stock, and the market wants to trade up. That's the power of this frenzy we're in right now. It's irrational exuberance. You can call it what you will. I'm a little worried that we're going to have a big correction in a lot of risk assets soon. I don't think it's a correction that lasts for that long because the liquidity machine's not being turned off. But I think we're going to go through a series of these bubbles, and it feels close to being at peak bubble right now.
So I don't know how you feel, but when I look around and I see all the things that are going into the DeFi space, and I see all the things that are going into the regular stock market, I'm looking around going, what's going on? Is this reality? Is this something that really should happen? I just don't see it. And there's a lot of people out there that disagree with me. They think that you have to get on now and it's going to be fantastic forever. And I'm telling you, the way that I see it is just like the ICO craze in the 2017s. If you get in early, it works out pretty well. But the people who stay around too long are the one holding the bags, and then those are the ones that get hurt. So if you're in this space right now, just be careful, and that's all I can really tell you. There's a lot of money to be made out there. If you want to be more risky, I'm not that risky of a person. I like to just play it, slow and safe, and just invest. But for other people out there, this might be your opportunity. That is obviously not investment advice. Just be careful. All right, so on that trend, let's take a listen to Mike and what he's talking about here as far as just advice. This guy has been around since, the cryptocurrency space. I remember him in 2017. He's one of the reasons why I actually got into it, because he was more of the traditional space. Then he got into cryptocurrency and just talked about this is going to be big. And he still has that vision, but there's a little caveat. Let's take a listen.
Keyword with some of these new coins. What's your ultimate takeaway for investors on these new names, these new coins that are coming to market?
Do your work, have fun, be careful. Listen, I lived through and profited through the 2017 crypto bubble, and this feels somewhat reminiscent to it. It was the ICOs back then, a new ICO every day, and the herd would swim to that ICO and jam the price up, and there'd be a frenzy of liquidity and price, and then it would collapse and they'd move on to the next thing. And it feels a little bit like that. I think DeFi is going to be around longer. I think that you are building infrastructure. Compound might exist in 20 years, and we might trade interest rates, not at JP Morgan, but on Compound or on some decentralized baby. But we're a sandbox right now, and it's a sandbox that's getting liquidity like it's an adult industry. And so it's be very careful. What's interesting is the new Bitcoin buyer is an institutional buyer. It's a high net worth buyer. They are coming in methodically and slowly, and they're not stopping. And so that's keeping the Bitcoin price up. A lot of the traditional crypto people, right, are selling their Bitcoin, buying the sexier objects. And so in this move of this kind of mania, which we're seeing in decentralized finance, it's pushing Ethereum price up because it's built on the Ethereum network and other protocols. It's probably putting a little weight on Bitcoin, which tells you how powerful Bitcoin is, that even with that selling pressure, it's still going up based on the macro story.
So yeah, and there it is. And I can just tell you that I think that, again, a lot of money to be made in the DeFi space. I think DeFi is going to be here for a long time. And the reason why I think that is because the banks have screwed us over for so long, and they have made a ton of money off us. It is time to take that power back. There is no reason why they should make all that the fractional reserve or for finance and lending out our money and just raking everything in. And they were the reason essentially for the 2008 collapse. So There is no reason why they should be in that much power. So DeFi is a magnificent play. Do I think that it is a bubble right now? Yeah, I do. I think it's going to go up. So you just have to be careful, because if you're the one late, you're the one holding the bag. It's like when they talk about poker. If you don't know who the sucker is in the room, you're the sucker. Last part is just a minute, and he's going to talk about the future of crypto in 10 years, and this is what kind of gets me excited. So as an investor, I like to go 3, 5, 10 years out to see where I'm going to be.
Positive in 10 years, the ecosystem around cryptocurrencies, Bitcoin, Ethereum, the whole space, blockchains, is going to be multiple times bigger than it is today. And so that's a big deal, and that's why I think this will be one of the most important years in the space. It still doesn't mean that from time to time the speculative frenzies get carried away. I own 2 Teslas. I think it's one of the best auto companies in the world. I think it's going to be around for a long, long time. And I think Elon's a genius. It doesn't warrant a $500 billion market cap trading at 1,300 times earnings. It just doesn't. And we will look back at this episode in Tesla in the textbooks of one that goes up with tulips and 1999, the tech bubble. This is a Tesla bubble. Is it going to pop today, tomorrow, the next day? I don't know. It's going to pop soon because there are just too many markings of what a top looks like. And so, I'm trying to stay as optimistic and bullish as I can on crypto because it's really early in the cycle, but give the warning that, there are other things in the markets that have me worried.
So I think he's wrong here. I don't think this is the year that everything's, pops off. I think next year, this is the momentum building phase. And once we get into Q1, Q2 of 2020, I think that's when it all takes off because all the rails have been built. All the different problems have been addressed. There's a lot more main nets out there. We're making inroads with these institutional investors, and you and me, who are retail investors, know exactly what it is, and we've been educated. I think next year is the big year. So having said all that, and what he talks about as far as Tesla, I will still buy Tesla and dollar cost average in later because I think it's a fantastic company. And also the same thing with cryptocurrency, and I still believe it. All right, let me know what you think in the comment section. Let's move on. So last article before we get to the Q of the day, and I'll make this one short. Why more Bitcoiners are transitioning from maximalism to centrism. And I was going to, highlight the whole article and go through it, but it was boring. And the only thing I want to say about this is that when I got in 2017, there was nothing but it was like the Tone Vays and the Max Kaisers and all those different people who were like shouting from the rooftops that Bitcoin is the only thing, and all the other shit coins out there were just there to take money from Bitcoin. And I try to see their mentality, and I kind of get it because we talk about cryptocurrency. So with Bitcoin currency, I get it, right? We're not using Ethereum as currency, right? We're not using it as the US dollar or the yuan or anything like that. So I kind of get that whole mentality, but it's been time. It's time to move on. And I consider myself what would be this term centrism. I think Bitcoin is going to be the first to pop off. I think it is an old technology. I think it's like the Netscape Navigator as far as like a browsing apparatus. But you have to have that Netscape Navigator to get to Google Chrome. And then you have to have Google Chrome to get to the Brave browser. So I do think this is going to make a lot of sense. And I think as time moves on, even these huge Bitcoin maximalists have to bow or bend the knee and go, look, this can't do everything. Even Trace Mayer, who is like the OG of OGs, Bitcoin maximalist, has said, he says there may be a number of altcoins that can perform specific functions better than Bitcoin and will have a reason to exist and thrive. Bitcoin doesn't need to satisfy all the needs of all the people because that is ridiculous and stupid. Sometimes you want a knife. Sometimes you want a fork. Sometimes you want both. So we have to keep an open mind. And he's right. I do not see Bitcoin as an oracle. I do not see Bitcoin for DeFi. I do not see Bitcoin for tracking merchandise and doing all the things that VeChain, like for instance, can do, and to identify frauds. And I just don't see it. Maybe I'm missing the point, but I sure as hell do not see Bitcoin as being an actual currency. Just look at what happened in 2017. They couldn't even handle what we did back then as far as the market. So Bitcoin centrism. That is my new phrase. All right, let's move into Q of the day. Hey everybody, welcome to the office for Q of the day. So got a couple great ones. There's actually two questions that I've been putting off answering until I found the right time. I think this was the right time. So there's two. First one is from Thomas, and Thomas asks a pretty great question. He says, "Hey Dan, I enjoy your perspective, and I want to get your opinion on hot wallets like Celsius versus putting Bitcoin into an IRA." If you don't realize, we did a pretty intensive or extensive video which goes over Roth and SEP and traditional IRAs and how that can work out for massive tax savings for cryptocurrency. It's not just for the traditional market anymore. You can put it over into cryptocurrencies, Bitcoin, Ethereum, even gold, stuff like that. So Thomas asked then, I didn't realize crypto IRAs existed until your recent video. Thanks for the heads up. How does taxing Bitcoin now and locking it up compare to these huge compounding interest rates we are seeing, which is 6%, 12%, 18% yearly for cryptocurrencies on platforms like Celsius? As with most things, doing a mix of the two is probably the best way to go. But if you only had a small to moderate amount of crypto, would you lean more heavily towards taxing it now or the weekly interest? So here's my answer in a nutshell. Yes, it is great to do two things at once. The things with, and we talk about this in the video, I'm going to link that. I'm going to have it pop up right now, but it's also going to be at the end of this video. The things with IRAs, they're great, traditional SEPs and Roths. The things that suck about them is that you can only put about $6,000 depending on your age. If you're 49 and a half or lower, it's $6,000 per year. If you're 50 or above, it's $7,000 per year. So that's pretty much it, which if you think about it, could be pretty substantial, especially moving forward. If you could have bought, like let's say Ethereum in 2015, 2016, when it was around $100 or $10, how great would that be? So if you could invest $6,000 in that, fantastic. Now $6,000 into Bitcoin, unless we get another huge sell-off, you're going to get like maybe half, or depending on the end of the year, might not be that much. So it really depends on how you want to do it. I see the IRA as putting it into certain cryptocurrencies that could, exponentially grow. I think Ethereum is a $10,000 coin, and I would probably put the money into that if I'm going to do the $6,000. But again, it's a combination of both. I will max out my IRA with iTrust, and I will put the rest of it into not the rest of it. I'm not going to say like I'm going to put everything into Celsius. I'm not. I'm going to put a part into Celsius, maybe 25%, somewhere that I can get a type of interest. Alex Mashinsky, he is the CEO of Celsius, and he is also the godfather of Voice over Internet Protocol, VoIP. And he talks about how his mission, and he's a very open guy. His mission is to make sure that you can all retire on the interest. And this is the very early days. So if you think about it, okay, well, how much would I need if the interest rate is like 8%, 9%, 12%, 15%, or whatever else it is? Depends on where you're at, right? I mean, if you're in Costa Rica, you don't need squat. If you're in New York, Manhattan, you're gonna need a ton of money. So it just depends on what you want to do. But again, for Thomas to answer his question, it's a combination of both. Me personally, I'm gonna max out the IRA. I'm going to put into money yielding things, and then also take a hard look at DeFi. And the rest of them, I have my exit plan for Bitcoin, Ethereum, XRP, Chainlink, Cardano. Everything is out there. I will never, ever sell all of my cryptocurrency. That will be ridiculous because you never know. It could be a moonshot. Just depends on which one. So hopefully that answers your question. So that's the first one. And now for the second one, let me bring it up. All right, this is from Chaz. Chaz, that's a good name, Chaz. It says, hey Dan, love the videos. Being toured here, I can't decide to keep my ETH on trade into DOT. He says he mines ETH at about 4 coins a month. It's pretty good money, actually. I mean, look, for Ethereum, who knows how much that could mean in the future. Which I think will lead me to my next question. Like with the ETH 2.0 coming out and its proof of stake, how's it going to, impact Chaz's business model there? Because he's going to have to find something else to mine. Anyhow, he says, I mine ETH at about 4 coins a month. Hodler, not much of a trader. Thoughts? Chaz, I'm right there with you. I am more of a hold-on type of person. I'm more of an investor, and I like to buy up things and just hold on to them. My favorite holds are land. I love to buy land and just hold on to it for years and just see it appreciate. You don't have to do anything. You don't have to look at any charts. You don't have to do too much. So land is fantastic, and I think cryptocurrency is the same way. You can buy it and hold on to it, and a good amount are going to go up. Some will not. XRP being one of my reminders of of when you should actually let go of something. But I'm just too damn stubborn to let it go. I just am. I've already lost 90%, so 10% ain't gonna kill me. Let's see what happens. Let's roll the dice, baby. Anyhow, to answer Chaz's question, if you're looking to keep the ETH or trade in a DOT, here's honestly what I would do is if you're mining 4 Ethereum a month, right? And I don't know what your overhead is. You probably have to sell some Ethereum to actually pay for the electricity cost and whatever other overhead you have. Great. So let's say you have to sell 2 Ethereum. I don't know. So you're left with 2. What I would do is I would hold on to a good amount. If I had 2 Ethereum, I'd probably hold on to 1.5 Ethereum per month, and the other half of an Ethereum, let's say it's $400, I would put $200 into DOT, and you know my slogan, dollar cost average. So I'm not going to take the $200 and drop it on a Wednesday and go, well, I hope that's the lowest price it is, and hopefully it goes up. I just don't do things that way. I have a strategy, and the strategy is just to be slow and sure. And that means that I'm going to put it in. For you, Chaz, this might be a good one. Every 3 to 7 days, put about $25 in, and then see what happens. Other people who have a ton of money, they might say, you know what? I'm going to buy DOT. I'm going to put $500 a day into DOT. I know people that do that. Just because they have the money and they're like, you know what? I'm going to dollar cost average in. I'm going to see where it all leads me. And it just depends on what you want to do. So dollar cost average, like I said, instead of taking the whole wad of money that you have, $200, $1,000, $100,000, and just dropping it all in one day, space it all out and just buy it at either like daily, every 3 days, 4 days, every week, every 2 weeks, every month, and then take a percentage of it. So, if you got $1,000, $200, we'll say every Monday, and then off you go, or $100 every 3 days, off you go, and that would be it. I think that's the safest thing, because right now there are so many fluctuations, especially with DeFi and things like that. If you drop everything right now, you're down 30% tomorrow, or you're up 100%. Who knows? But I would rather be a little bit safer than a little bit loose with the money. And I think over time, that's the winning strategy. It's boring, but guess what? Boring works, and that's usually what happens with investors. So you never hear too many investors crying like, oh man, I lost so much money over the last 20 years because I dollar cost average. Usually it's traders. All right, so that's it for question of the day. Let's jump back. All right, and that's it. So hope that answered some of those questions for those 2 people. Really thankful that you made it to the end of the video. If you don't know, there's a join now button underneath. You don't get anything special. It's just like a tip. And I just do random shout outs. So for all my level 1s, there is only 1 level. I used to have 2, but I just said that it's probably best if you just keep that money and spend it in crypto. So Johnny Henderson, Joey Serena, Marguerite Bonnet, Kelly Church, who we got? Frank Weinhammer. That's a good one. I Am Not I, Barry Belasco, and Metalsman75. So thanks everybody for joining. I really appreciate it. If you like these types of videos, there's going to be 2 more going to pop on your left and right. Not sure because YouTube controls all that stuff, but I'll try to do my best. And yeah, go ahead and check those out. All right, thanks so much for watching. See you on the next one.